This conference will now be recorded.
Hey, welcome everyone. Welcome to Moving Markets with Jeffrey Dunyan and Kevin Hurley. I'm Kevin Hurley. On the other end of this microphone, we have the owner of Safe Option Strategies, Jeffrey Dunyan. How are you doing today, Jeffrey?
I am doing fantastic. Thank you, Kevin. Glad to be here on what I think is kind of a crazy, kind of a nutty Monday of trading. But I'm happy to be here. It's good. It's a good day. All my portfolios are up today. Can't complain about.
Hey,
Never should complain about that, right?
right. Let's start with that. You talked about a nutty Monday. I thought we were supposed to not fight the Fed, right? Which means the Fed is going to raise interest rates, which means the market should go down. So if we're not going to fight the Fed, the market should go down. How come the market keeps rebounding?
Because everybody that well, not everybody, because I'm on the opposite side of this. I'm not one of the everybody that I'm about to describe. There are a lot of people who either genuinely believe the Fed is not going to raise rates again, or they know they are, but they're saying otherwise, and they're intellectually dishonest because that intellectual dishonesty is pushing stocks higher and helping the portfolios that they're managing.
So if I can
It's
jump in, does that mean that if we see CPI numbers come in hot or higher than expected, that we could see a run out of the market extremely quickly?
a really big sell off, like people getting spooked and automated trading taking over and algorithms running things. Yeah, absolutely. If those CPI numbers come in hot, um, every what it'll do, I believe, is everyone who hopes the Fed won't raise rates and is acting as though they know that and saying it as though they know it, they're gonna all, you know, be shown to be, I don't want to say, look, I don't want to say frauds. That's kind of a strong thing. They're going to be shown to be intellectually dishonest. I guess I can't think of a better way to describe it. It's going to expose them for what they're doing. And yeah, you're going to get a massive sell off. You're going to get, the algorithms are going to take over. Retail investors are going to run the show for a couple of days at least. And it's yeah, I mean, the chinks in the armor are there. The underlying fundamentals of the economy kind of suck right now, and the market can only bucket for so long.
Well, if you don't mind me talking about CPI for a minute, um, the CPI is still moving up, you know, zero point 0.3, zero point 0.4, zero point 0.5. I think it was zero point 0.5 in January, zero point 0.4 in February. We're expecting zero point 0.4 for March, which will probably end up being zero point 0.5. I just find it interesting that we're still, you know, on an annualized rate going above 6.5, 7% year over year. But we are having some of our bigger numbers get knocked off from the end of last year. So, you know, in the running 12 months, our inflation might only be as high as 6% year over year. The smallest increase since September 2021. But we're still increasing year over year 6%. We might be dropping off some of the bigger numbers that came a year ago, but let's face it, we're still going to be at inflation well over the 2% that the Fed wants. We're going to be most likely in that 4.5 to 5% year over year. We came from what, 7.5 to 6.8 to maybe this year we're at 5. We're talking about 20% inflation on everything we buy over 3 years. It's just not good. I don't see where people are trying to outguess the Fed and think, you know what? They're going to stop rates because the banks are screwing people again. They're going to stop rates because they had to the Fed had to increase its balance sheet by 460 billion through March to cover banks. It's just, I don't see the logic at all. If you can explain it to me, I'm all ears, because it's illogical, doesn't make sense.
Well, I certainly wish that I could explain it. I've to members of Safe Option Strategies that are part of the daily live trading that we do every morning. I've pointed out multiple times, we had inflation last year going up like this. Now we have inflation going up like this, and there are people that act like it's going like this, and it's not. There's a huge difference between inflation going down and going the other way versus the rate of increase not being as steep as what it was. But here's what a lot of people honestly just don't get. When you're up in let's, I don't know exactly what the number is, but bear with me. If your March number last year was something like 7%, and again, I don't remember exactly what it was. And this year, the number is, it says right here, the consensus year over year is expected to be 5.2. So if it was 7% last year in March, and now it's expected to be 5.2%, see, this is not, people want to think this is going backwards somehow. It's not 7% minus 5.2%. It's 7% plus 5.2%. It's over a 2-year period, it's 12.2%. It's still going up, and it's still going up at a faster 2-year rate than we've seen in over 40 years. It's just that it's not going up as fast this year in March as it did last year in March. And it's like, there's I really believe this, Kevin. There's a lot of people who know that and sort of spin it in a way to disguise it. They talk about it in a way that makes people think, oh, inflation's going down. No, it's not going down. It's just not going up as fast. Now, would you rather have it going up not as fast this year as it was last year? Of course. And it's not wrong to suggest that that is good news that it's not going up as fast. But I'm telling you, until it turns around and starts retreating, or until the number is an annual increase of 2% or less, the Fed has got to keep jacking rates up. I don't see that they have much of a choice. Now, that doesn't mean they couldn't pause for one Fed meeting. That doesn't mean they couldn't decide to, sit on their hands one time and kind of let things play out. But this notion that they're going to stop indefinitely, or that they're going to reverse and bring interest rates down before the end of the year, there's lunacy in that thinking. There's absolute lunacy in that kind of thought process. So no, I cannot explain it to you other than to say there's a little smoke and mirror game going on with a lot of people, because a lot of folks just don't realize we're still going up. We're still adding more to the prices that are already high. We're just not adding as fast as we were.
Can you imagine what would happen to our markets if they paused for 1 month, right? And then started up again? The lack of credibility, how people would be running for the sidelines.
Let's say hypothetically they paused for 1 month, and then instead of going back to a 25 basis point increase the next time they meet, they realize they shouldn't have paused and had to go to 50 basis point instead, which, this amount over 2 meetings is the same as this amount each meeting, but this scenario would rock people's world. It would absolutely terrify people. There's also the fear amongst some people that if they do pause, there is this idea that maybe this bank crisis, because wouldn't that be the only reason for them to pause, is this that's what all the talking heads are saying, is that because of this bank crisis they may have to pause so that it doesn't get worse, right? So what if they do that pause? What's potentially the reaction from everybody? Oh crap, This banking thing is worse than I thought. It was bad enough to cause the Fed, who's nowhere near getting inflation down to 2% annually. This is worse than I thought. I better take all my money out of my bank before it collapses and run for the hills. I better pull all my money out of the stock market. I better call my broker today and tell him liquidate everything and go to cash.
I swear you're giving people too much credit. I don't think they're that smart. I think they'd be like, oh, it's over. They're going to start decreasing rates in the near future, and everyone piles in to get their butts handed to them.
You're going to have some people who are a little bit desperate who are going to be saying that, and it could go either way. Honestly, it could balance each other out a little bit. But I think that the media loves to focus on the negative. When's the last time you saw a super positive report, whether it's the financial media, the mainstream media, the right-wing media? I mean, whoever it is, they thrive on bad news, on negative news. So you're going to have some people in the media that are going to willingly spin this as, oh no, the sky is falling. The bank crisis is worse than we thought. The Fed, it was so bad, in fact, that the Fed had to pause these rate increases. That's going to risk inflation running away. Now, like you said, maybe some people say, oh, ding dong, the witch is dead. And I'm by the way, not talking about Janet Yellen. She's going to live forever, unfortunately. But some people are going to say, ding dong, the witch is dead and the crisis is over and everything is going to be rosy and the Fed will reverse and start lowering rates. Again, that's just nonsensical. I can't even go into all the reasons, but I'm fearful that a rate hike increase of 25 basis points will shake things temporarily, but a pause might shake it a little bit worse, and it might open that door for the need for that 50 basis point hike the next time, and that will be the catalyst to put us into a 2008 35 to 50% sell-off in the markets before the end of this calendar year. I know that's a bold prediction, but let me add something to this.
Did you just say there? What was that percentage?
35 to 50% before the year is over.
Ooh, being up from 7% to losing 35 would be a 42% down year
from its peak. Yeah. Now, here's the other thing that worries me is the people who get crushed in a situation like that. So you've got these individuals. I'm going to put people in three categories, okay? You've got people who give their money to their broker and they trust their broker. And a lot of brokers, a lot of hedge fund managers, a lot of, money managers right now, I think are sort of legally manipulating the market. They're desperate to get back their losses from last year. They're driving things up, but they know how the game works. They know that they can take large stakes in companies. That'll drive the price up automatically. That'll get them a profit. And then they know when to get out. I almost said patients, like they're a doctor or something. Their clients allow them to do the trading and leave it on autopilot. Okay, you've got those people. Those people are going to do okay. You've got the retail investors, the people who try to manage money on their own. Most of them are following someone, and chances are they might not do really well, but they're probably not going to get crushed. They're gonna follow the leader. When they see everybody else selling out, they're going to sell out. When they see things going wrong, they might take small losses, but they'll bail out before the losses get too big. It might be people like SOS members that know how to adjust a trade to a break even or a much smaller loss, but they might get kind of ground down into a sort of, I didn't make anything, but I didn't lose anything position. And that's not a horrible place to be if you've got a 35 to 50% sell-off. And then you're going to have everyone else who's going to get screwed, who's going to get royally hosed. These are teachers that are within a year or two of retirement. These are city employees. These are union employees who have a big 401k. They let other people manage it. They're not overly involved in it. They just put it away every month, wanting it to grow, wanting it to be their retirement. And they're the ones that get burned for that 35 to 50% loss in their entire retirement, because they're not the ones who have the ability to pick up the phone and say to their broker, hey, sell everything for me. And the broker has to do it. They're not the broker who says, hey, I know when it's time to get out. They're the people who have the lowest common denominator person who is legally authorized to trade money, who just sticks it into a mutual fund that matches what the markets are doing. They get their commission on it. They get their fees on it, no matter what the markets do. Doesn't matter if the markets are up 30% or down 50%. They get their commission. They get their bonus. They get to make all this money. And it's their clients that get absolutely, completely, and totally screwed. The people who are just about ready to retire, or maybe just retired, and they haven't taken over the management of that money themselves, and they get absolutely unequivocally burned. And it's this vicious cycle because they lose their buying power. That makes the supply and demand issue even worse. That makes the recession more likely. Consumer spending goes down. It's a brutal spot to be, and I'm telling you, it's coming. It's on the horizon. I know that makes me a real doom and gloom. I feel like Chicken Little running around saying the sky is falling, the sky is falling, or more like Chicken Little preparing everyone for the sky is falling. I know that makes me very doom and gloom, but I'm so fearful that it is right around the corner.
It sure seems that way. It'll be interesting to see where we end up next week after we get our inflation numbers this week.
Yeah, thanks for indulging me on going off on a big rant. I'm gonna shut up now, Kevin, and let you kind of take us home and wrap things up here.
We'll love it. I was gonna say, to finish off, what do you think about the Masters?
Okay. Congratulations to Rahm, man. That guy, and I feel a little bit bad for Brooks Koepka. He had a brilliant day 2 and day 3 and struggled on day 4. Rahm stepped up to the challenge, but you know who the story is for me of the Masters?
The amateur Bennett that should be like, I'm going pro. I'll take $433,000 for being tied for 7th. Show me the money.
Okay, I obviously that kid made a name for himself. He is on the map. Everyone's going to be watching him. Everyone knows he's got amazing talent. But the story for me was Lefty.
Phil Mickelson.
Lefty. Oh my gosh.
Tied for 2nd.
Lefty tying for 2nd when the guy is, you realize he is a little bit less than double the age of the average person out there on the tour.
Well, to be honest with you, I've loved Phil in the past. With him going to Live Tour, I've got some weird feelings. But my favorite was seeing Freddie Couples being the oldest player to ever make the cut.
To make the cut?
And actually
that was pretty cool.
Good round.
That was pretty cool. And I've always been a fan of Freddie Couples. I've always liked him. Classy guy. He's a dignified winner as well as a dignified loser. On tournaments that he doesn't do well in, he doesn't make excuses. When he does well and wins tournaments, he's a gracious winner. He compliments his competitors. If you like sports and if you like golf, Freddie Couples is the kind of guy that you wish was always out there competing because he's so classy about it. Yeah, I know Phil Mickelson has had some bad press over the last few years. I found myself, Kevin, you're going to be shocked at this because of some of our past conversations. When he got caught in multiple cheating scandals, texting hookers all over the world, sleeping with everything that would sleep with him, and his mega hot wife divorcing him, I got so down on Tiger Woods. I'm like, I hope he never wins again. I hope he chokes every shot he takes from here after. And I got to be honest with you, I found myself kind of sympathetic to the guy, watching him limp around on the course, watching him try to go out there and compete. And I guess I'm a sucker for someone, against all odds trying to make a comeback. And I was a little bit sad that he had to withdraw. I was a little bit sad seeing him limp around out there after, 8 or 10 years ago when all that stuff hit the fan. I was so down on Tiger Woods. I'm still not excusing any of the stuff that he did, but I found myself kind of being sympathetic to Tiger.
That's just because you're a nice person. I was loving seeing him limp around. They're just kind of a wuss for not pushing through it. I mean, the military pushes through stuff. He doesn't have to. I get it, but
yeah. Well, that's why I'm saying I kind of surprised. Now, I wasn't wanting Tiger to win, but like I said, I found myself being a little bit sympathetic towards him. I surprised myself by even showing that little bit of sympathy. All right, listen, final thought, this entire week is going to come down to that CPI report. Whatever else goes on, when those CPI numbers come out on Wednesday morning, watch out. You're either going to see this market take off like nobody's business, or you're going to see it sell off like nobody's business. And I really do not believe there is anything in between. Anyone wanting to open any kind of a new trade this week and get into something that they're not in already, I'm telling you right now, I think probably your best bet is going to be something very non-directional on one of the indexes. I'm leaning a little bit towards the diamonds or the Qs. They tend to be a little more volatile than the S&P. I am probably going to do something in the way of a non-directional trade on the Qs for Safe Option Strategies members. I got to look at some numbers and make sure the numbers make sense. But seriously, I think a big sell-off or a big rally to add to what has already been a surprisingly bullish year overall.
Well, yeah, I might even wait till Wednesday. Let's see some numbers come out and try to follow the market after that. But I'd agree with you, non-directional. And if you're truly trying to outguess the market, wow, more power to you. It doesn't seem like it's a smart thing to do. All right, guys, I appreciate everyone. Go ahead.
It's always a safe bet to call or trade, but if you're looking to put on some type of an options trade, some type of a spread trade, you got to go straight up non-directional. You've got to be in a straddle or strangle, a long iron condor. Don't risk anything else that's not easy to adjust out of or can profit you regardless of the direction of the move, because trying to outguess this market right now is a fool's game.
Agreed. All right, guys. Hey, appreciate everyone being with us today. We look forward to talking to you next week. We'll have a lot more information next week. And just as a reminder, we start that first week of earnings that come from the banks this week. And then we
JP
go into
Morgan,
full-blown banks and the start of the earnings season with Alcoa next week.
JP Morgan and Wells Fargo and Citigroup, I think, are the big ones that report on Friday, and maybe one of those might be on Monday. I think all three of those, at least two of those three, I know are on Friday. And Alcoa used to be what a lot of people considered the official kickoff to the earnings season. I really think now, the day that JP Morgan and Wells Fargo, they're always at the front end of those banks reporting. I think for most people, that's the official start of earnings season now.
Yeah, it could be. I still follow Alcoa.
Well, to me, it feels like earnings season has begun when those first big banks report.
They do. And you have that first week where those banks are reporting. Agreed. All three that you mentioned are on Friday. You have Goldman Sachs and Blackstone on Tuesday. What else do we have?
And when does Alcoa? Is Alcoa still AA?
Alcoa is on Wednesday after the market closes, but Morgan Stanley, U.S. Bancorp reports on Wednesday. Discover Financial Services, Tesla next Wednesday on the 19th. Zions Bank, one of our locals, will probably be eating it hard. It'll be interesting to see.
Yeah. Well, Alcoa on the 19th next week. I still, with the three big banks that report on Friday, to me that feels more like an official start to earnings season.
Well, okay. I just want to see JP Morgan go back up to like 185, 200.
Be nice. All right, Kevin, thank you. Good podcast today. We'll do it again next week and talk a little bit more about some of those early bank earnings, as well as what happened once the CPI numbers came out.
Sounds good. Look forward to talking to you next week.
Okay, bye everyone.
Bye bye.